Talking business news now, and I'll start with maritime-related matters as current global challenges are impacting Nigeria's trade volume. Now, the operators of the PTML port say that the slow trade in transactions recorded so far in the nation's ports can be attributed to rising global inflationary trends. TVC News correspondent Ifeanyi reports.
PTML is a rolling rollout port that handles huge volumes of vehicle imports in Nigeria. But the recent controversy over the implementation of the vehicle identification number valuation policy has resulted in congestion and backlogs of uncleared vehicles. The managing director of PTML Port says that disagreements over the new duty regime for imported vehicles have built up costs for both importers and port operators.
As at now, we are still clearing the backlog of all these cars. We had one ship which was basically sitting in the terminal for like 20 days. And this is extraordinary because our ships, basically, their turnaround time is like 2 days. So for this ship to stay for 20 days, it was a major problem for us. It was a huge financial loss for us. And of course, it created a lot of additional costs to everyone because there were additional costs of storage because the car stayed in the port for much longer. Of course, from our side, we helped our clients. We waived the storage. And this was an extra cost again for us. So anytime, the port is stopped, is a huge financial loss for everyone.
Speaking on trade projections for 2022, he knows that current global challenges have spiked inflation, leading to slow trade volume at the seaports.
Nigeria imports a lot of intermediary goods which are used by Nigerian manufacturers to produce something else. So these are required, and when these inputs are becoming more expensive, of course also the final product is becoming much more expensive. And this is what we are seeing in Nigeria at the moment. Inflation is very high and is growing, and the purchasing power of people is shrinking. So they are not able to consume as before. And so there is clearly a slowing down of the economy.
He maintains that government should strike a balance by applying realistic values for vehicle duty payment. Ifeanyi, TVC News, Lagos.
And now looking at highlights of transactions from the Nigerian exchange on Monday, prices of company shares were down again on the stock market as many investors maintained low appetite for securities transactions. Let's join Effiong Ekop in this report.
Stock market bears returned to different trading sectors of the market, held down prices of companies' shares and other market activities. Investors lost over 10 billion naira on the back of dropping prices and pressures from sales windows. Trade index came down by 0.17% to emphasize losses on investment. Big business losers were Len Africa, Unity Bank, Keveton Aviation, FCMB and Transcorp. On the windows of top trade gainers were Better Glass and PZ as forces of demand improved their stock values beyond 9%. Other gainers included Livestock Feed, Linkage Assurance and Jayez Bank. Trade volume was 359 million shares with the value of 2.61 billion naira. Many investment managers said the market was going through fatigue. Effiong Ekop, TVC News, Lagos.
And on the international market, Asian shares also faltered and oil prices leader as the coronavirus lockdown in Shanghai hit economic activities, while the yen extended its stomach churn in descent as the Bank of Japan also stood in the way of higher yields. Risk sentiment was helped by hopes of progress in Russian-Ukraine peace talks, which is to be held in Turkey this week after President Zelensky said that Ukraine is prepared to discuss adopting a neutral status as part of the deal. The equity action was muted, with MSCI's Products Index of Asia-Pacific shares outside Japan flat And the index is down about 2.1% for the month of March, but well above recent lows. China's blue chips also shed 0.8%, while Japan's Nikkei lost 0.4%, but is still almost 6% firmer for the month, as a sink in yen promises to boost exporter earnings. S&P 500 futures also eased 0.3%, while Nasdaq futures slipped 0.4%. The Eurostock 50 futures managed to add 0.3%, and London's FTSE futures also 0.2%. Wall Street has so far proved remarkably resilient to a radically more hawkish Federal Reserve. Markets are pricing in 8 hikes for the remaining 6 policy meetings this year, taking the fund rate to about 2.5 to 2.75%. And wrapping up business news now, oil prices on the international market tumbled more than $5 as fears over weaker fuel demand in China grew after financial hub Shanghai launched a 2-stage lockdown to contain a surge in COVID-19 infections. US West Texas Intermediate crude recorded a price dip of 4.38% to hit $108.90 per barrel. Brent crude also sold at $115.90 per barrel, registering a downward price margin of 3.96%. Bonnie Light's performance also started the week in the green territory with a price increase of 0.67% to sell at $120.70 per barrel. And for the OPEC basket, crude oil dealers offered $118.70 per barrel, recording an uptick of 1.52%.